Hey there, curious minds, and welcome to the deep dive. Ever found yourself looking at headlines after a big tech company drops its quarterly earnings and wondering what the real story is beyond just the raw numbers?
Oh, absolutely. It's not just about the figures themselves, it's about the trends underneath, the strategic moves, the innovations, and really what it all means for our digital lives.
Right. These corporate reports, the earnings calls, they can feel like puzzles, can't they?
They really can. Kind of dense, but filled with crucial insights if you know where to look or how to piece them together. Our job here really is to cut through some of that corporate speak, find those valuable nuggets for you.
Exactly our mission today. We're taking a deep dive into HP Inc.'s fiscal 2025 third quarter results. And to do that, we've got their official earnings call transcript right here, plus their detailed 10Q report that's the big quarterly filing with the SEC, and of course the press release they put out on August 27th, 2025. So, our goal, unpack HP's performance, shine a light on their strategy, and explore what it all signifies for tech's future and, importantly, for you.
Yeah, we'll look at everything: financial health, market position, their big bets on things like AI, which is huge right now, and even their sustainability efforts. It's quite a broad picture.
Okay, sounds good. So let's dive in with the big picture first.
Yeah.
What's the initial financial snapshot HP gave us this quarter?
Okay, top line first. HP reported net revenue of $13.9 billion. That's for Q3 fiscal 25, and it's up 3.1% year over year. Respectable.
Okay, 3.1% growth. But you mentioned something interesting before we started about the earnings per share, the EPS.
Right, yeah, this is where it gets kind of intriguing. There's this tale of two EPS figures. Their GAAP-diluted net EPS, that's the standard accounting version, was $0.80, which is up a significant 23.1% from last year. Big jump.
Oh, okay.
But then their non-GAAP-diluted net EPS came in at $0.75, and that's actually down 10.7%.
Down. Huh. That is a curious divergence.
Yeah.
What's driving that gap?
It really is. And it tells us something right away about their financial management. So non-GAAP figures, for everyone listening, are basically the company trying to show its ongoing operational performance. They often exclude things like one-time costs, restructuring, acquisition expenses.
Got it. Stuff that isn't part of the day-to-day running of the business.
Exactly. And in HP's case, this quarter, there were some significant tax adjustments, big ones. The GAAP number got a nice boost from a $139 million tax benefit.
Oh.
But the core operational earnings reflected in that lower non-GAAP number actually dipped a bit. So it suggests that, yes, they had some favorable one-offs, but the underlying operations faced some pressure impacting profitability slightly.
Interesting. So careful management, but also some market headwinds showing through.
Precisely. It's that balance.
Okay, so despite those pressures on the core profit number, it sounds like they're still generating a lot of cash.
Oh, definitely. Net cash from operating activities was strong, $1.7 billion. That's up 17% year over year. And free cash flow hit $1.5 billion, up 13%. That's the cash left after they pay for maintaining or expanding their assets.
And they return cash to shareholders, too.
They did. About $0.4 billion through dividends and buying back shares, which is usually a sign of confidence and financial stability.
Right. What about margins? Did those pressures show up there?
They did, somewhat. Gross margin saw a decrease, 1 percentage point or 100 basis points.
Okay.
Primarily driven by, well, a few things. Higher tariff costs, a product mix shifting more towards personal systems, which sometimes have lower margins than print supplies, and unfavorable currency exchange rates.
So external factors mostly.
Mostly, yeah. But they did manage to offset some of it with disciplined pricing. Operating expenses were up a bit too. Higher variable compensation, investments in their go-to-market strategy, reflecting that strategic spending we talked about, investing for growth.
Okay, so that's the overall financial health check. Careful management, good cash flow, some margin pressure, strategic spending. But you mentioned personal systems, laptops, desktops. Sounds like that's where the real excitement is happening right now, especially with AI.
Absolutely. This segment really stood out. Personal systems revenue grew an impressive 6%, reached $9.9 billion. And that's even in constant currency, taking exchange rates out of the equation.
6% is solid growth in the PC market.
It really is. And their operating margin for PS came in at 5.4%, also solid.
So what's driving that? Just More people buying PCs.
Partly, yeah. Total PC unit volume was up 5%, but digging deeper, commercial PS revenue, think business laptops, was up 5%. Units were up 3%, but crucially, average selling prices, ASPs, were up 4.6%.
Ah, so they're selling more expensive machines to businesses. Better mix.
Exactly. Favorable mix and some smart pricing there. On the consumer side, revenue saw an even stronger 8% increase. That was driven by an 8% rise in units. ASPs were slightly down there, though, due to mix and currency stuff.
Okay, still strong growth overall. But you mentioned AI PCs.
Yes. This is the big story within personal systems. The Windows 11 refresh cycle is definitely a factor, people upgrading older machines. But the adoption of AI PCs is, well, it's accelerating fast.
The numbers you showed me earlier really jumped out. Double-digit sequential growth for AI PCs.
That's right, double-digit growth just from Q2 to Q3. And AI PCs now make up over 25% of their total PC mix.
A quarter of their sales are AI PCs already.
Wow. And get this, that's a full quarter ahead of their original plan.
Okay, when you see that kind of acceleration, what's driving it? Is it just hype, or is there real value there?
Oh, it's definitely more than hype now. This signals customers are actively looking for these new capabilities, and they're willing to pay a premium.
A premium? How much?
HP said AI PCs carry a 5% to 10% higher ASP compared to similar non-AI models.
So AI isn't just a feature, it's creating a higher value tier.
Interesting. Exactly. It's rewarding companies like HP who are delivering the innovation, and the demand is being fueled by software, actual applications using the new hardware.
Like what?
Well, think Adobe, Zoom. They're using the neural processing units, the NPUs, on these PCs for faster performance. Creative tasks, video calls. CrowdStrike, the security company, is using them to scan memory faster. Better security.
So real-world benefits.
Definitely. And Microsoft is helping too, improving its libraries for on-device AI tasks. Makes it easier for developers. Plus, HP has its own AI apps like AI Companion and Omen AI for gaming. They're seeing usage climb month over month.
So even if some IT departments are still cautious.
Exactly. Even with some CIO or channel partner hesitation you might hear about, the sales figures show end customers are buying in. They see the productivity gains.
And HP's pushing innovation hard here too, right?
Mm-hmm.
I saw something about HP Dimension.
Yeah, that sounds pretty wild. HP Dimension with Google BIM uses 6 cameras and AI to generate 3D video for better remote collaboration. Like, you're almost there.
Sci-fi stuff. And the OmniBook 5.
Right, that's for the prosumer market. High performance, but the picker is up to 34 hours of battery life.
34 hours. Okay, that's impressive.
It really is. And these innovations, they show HP's confidence in the PC market long term. They figure, just over half the install base has moved to Windows 11.
Meaning there's still a lot of older machines out there to be replaced.
Especially in the small and medium business segment, the SMBs. Huge opportunity there for future refreshes. And getting that personal systems operating margin back up to 5.4% within their target range shows they're managing profitability well, too.
Okay, so personal systems, clearly a bright spot, driven by AI and upgrades. Let's shift gears then. What about printing? The numbers looked a bit tougher there. Revenue down 4% to $4.0 billion, down 3% in constant currency.
Yeah, printing definitely faced some clear headwinds this quarter.
What kind of headwinds?
Primarily softer demand than they expected in the office market, especially North America and parts of Europe. Plus, a really aggressive pricing environment, lots of competition.
So businesses may be delaying printer purchases.
It looks that way. Connecting it to the bigger picture, it seems a lot of companies are prioritizing other investments right now. AI infrastructure, those new AI PCs we just talked about, maybe print hardware takes a backseat in the short term.
Makes sense. And supplies revenue. Ink and toner.
Also down 4%.
Fair.
Partly due to fewer printers installed overall, maybe slightly less usage, and those unfavorable currency impacts hit there too.
Okay, so softer demand, tough pricing. But here's something HP said that caught my ear. Hardware units were down 9%, quite a bit. Yet, they said the number of pages actually printed hasn't really deviated from their plan.
Mm-hmm.
How does that work? Fewer printers, same amount of printing. Doesn't that suggest the demand for hardware is just delayed, not gone?
That's precisely their interpretation, and it holds water. That stability in pages printed gives them confidence. It suggests the underlying need to print is still there.
Okay.
Companies might be delaying buying new machines now, maybe stretching the life of old ones, but eventually they'll need to refresh that hardware for reliability, for new features, for the employee experience.
So HP is playing the long game.
Seems like it. They're focusing on placing profitable units, prioritizing higher value category, positioning themselves for that eventual refresh cycle.
Right, and they're bringing AI into print, too. It's not just PCs.
Not at all. They mentioned HP Neo.
Neo.
Yeah, an AI-powered chatbot specifically for industrial print shops, designed to help them improve production efficiency, like an AI assistant for the print floor.
Interesting. And HP Build Workspace.
That one's for large format printing. Think architecture, engineering, construction blueprints. It's an AI tool that helps vectorize drawings, reducing drafting time by up to 80%.
80%. That's a massive efficiency gain.
Huge. So they're finding growth pockets even within print. Consumer subscriptions saw double-digit growth. Industrial printing did well, fueled by double-digit hardware growth in those specialized areas.
So it's a strategic shift within print.
Exactly. Now, print margins did dip sequentially in Q3 by 200 basis points, 2 percentage points.
Why was that?
Mostly a lower mix of high-margin supplies revenue in the quarter, but they expect that to improve in Q4, getting back towards the higher end of their 16–19% target range, probably due to seasonally higher supply sales.
Okay, so challenges, but also clear strategies and innovation in print. Stepping back from the segments, what about broader operational stuff? They talk about their future-ready plan. What is that exactly?
Right, the Future Ready Plan or Fiscal 2023 plan. It's basically their big push for efficiency and transformation. It involves digital transformation, optimizing their product portfolio, and significant operational efficiency drives.
Which includes cost savings.
Yes, substantial structural cost savings. And that does involve workforce reductions. They actually amended the plan back in February 25 to increase the number of planned reductions by another 1,000 to 2,000 employees on top of the original 7,000 target.
Wow, that's significant.
It is. It's a major effort. Estimated pre-tax charges around $1.0 billion. But the key here is that the savings aren't just disappearing. They're being strategically reinvested.
Reinvested where?
Into those growth areas we've been talking about, like AI, and into their people, upskilling and training. It shows where they see the future, and they're making tough calls to fund it.
Speaking of tough environments, what about trade? Those new U.S. tariffs on imports imposed back in April 25. How's HP handling that? Must be a headache.
You'd think so, but they've been remarkably proactive, really agile. They essentially saw this coming and moved manufacturing.
Moved it where?
Out of China for products heading to the U.S. They've already completed shifting locations, so the great majority of U.S.-bound products aren't made in China anymore.
That's a huge logistical shift.
Massive. But it allowed them to mitigate the majority of those tariff costs already in Q3.
Already?
Yeah, and they expect to fully mitigate them going forward through these supply chain moves, plus other cost management and some selective price increases where necessary.
So they planned ahead and executed.
Very effectively, it seems. Shows real operational strength in navigating that complexity.
Okay, beyond operations and financials, HP also highlights sustainability and social impact. What stood out to you there?
Well, what's interesting is how integrated it seems to be becoming in their core business, not just a side project. For example, today, 9% of their main products, printers, desktops, laptops, displays, incorporate recycled content. That's a concrete number.
9%. Okay.
And they hit 100% renewable electricity for all their U.S. operations, a big step towards their net zero goal.
Good progress. And socially.
They're investing in digital literacy. Partnering with the YMCA on digital hubs already reached over 700,000 people globally. And they're also supporting a White House initiative focused on advancing AI education for young people in America.
So it connects back to building skills for the future, including AI.
Exactly. It's not just philanthropy. It builds brand value, attracts talent, ensures their future customer base is digitally literate. It connects to long-term business health.
Okay, so pulling all these threads together, the financials, the segment performance, AI, operations, sustainability. For you, our listener, what's the bottom line? How is HP managing its money, and what's their outlook for the near future?
Well, that robust cash generation is still key. We saw the $1.5 billion free cash flow this quarter, and they signaled more share buybacks might be coming soon. Their gross leverage, basically debt versus earnings, is improving to just over 2 times, which is healthy.
Okay, good financial footing. What about guidance? What are they expecting next quarter, Q4?
They're guiding to non-GAAP diluted net EPS between $0.87 and 97 cents. And for the full fiscal year, they expect free cash flow between $2.6 billion and $3.0 billion. Solid numbers.
And second-wise, more growth in PCs?
They project sequential revenue growth in personal systems, yeah. Driven by that continued Windows 11 momentum, more AI PC adoption. Plus, the holiday season should help consumer sales.
In print, improving.
Print is also expected to see sequential operating profit improvement, getting back to the top end of that 16–19% target range, probably helped by seasonally higher supply sales in Q4.
So overall, they sound pretty confident.
They really do. They're articulating a clear path and seem confident in their ability to deliver on these expectations.
Wow. What a truly comprehensive deep dive. HP Inc. is clearly, navigating some really complex market dynamics. It's this fascinating dual focus, isn't it? Pushing hard on innovative growth, especially AI PCs, while also being really disciplined on the operational efficiency side. It's a tricky balance.
It absolutely is. And there are strategic bets on AI, even weaving it into printing. That's notable. Add the commitment to sustainability, the effective tariff handling. It paints a picture of, well, resilience and forward thinking, I'd say.
Definitely. So for you, our learner, here's something to mull over, a provocative thought perhaps.
Yeah.
How might HP's really aggressive push into AI, weaving it into everything from basic laptops to specialized industrial printers, how might that fundamentally redefine what we even expect from our everyday devices? What if that line between just a hardware product and an advanced AI service platform gets completely blurred? What new possibilities? And let's be honest, what new challenges could that unlock for the entire tech industry down the road?